Hi and welcome back to today's morning report with me, Richard Perry, market analyst at Handtech Markets for Wednesday the 9th of July. I'm going to move on to sterling dollar now. And yesterday we had a break of that initial support at $1.71, big figure there or thereabouts. And it hit 70.80, $1.70.82. Now, what does this actually mean? Because there was almost an instant reaction back above the resistance, sorry, the support at 171. So, does that mean that that support has now been broken, or is that just going to be taken as a minor aberration? It's. I just think that the fact that it was such a quick rebound back above the level 171, I think that you can almost just say that use it as a minor aberration, because the fact is that it didn't really break down for long enough, I think, to suggest that there was any real intent behind the move. And I think it just goes to show also that the bulls are fairly strong still for this sterling chart, and I think that it just backs up my opinion that even if we do get a minor breakdown of that 170 level, I think it will still only be a very near-term a near-term correction before the buyers start to return again. The key support comes in at 70.62, but as I said, I think it will be a situation where this is just a drifting consolidation. I don't having previously thought that it was sort of forming a top pattern. I don't really see it as a top pattern anymore. I think it's more of just a drifting consolidation. And just looking at these momentum indicators, you're just getting. I mean, the RSI has drifted back below 70, which theoretically is a sell signal. And the MACD lines are coming together, and the stochastics. But I just think it just has more of an air of a consolidation phase rather than any sort of real correction. And I think that the fact that you've got this key support that comes in only 71 down to 60. 71.10 down to 70.60, so it's around 50 pips on the downside, which is not a huge amount of a move. I think you could see that support coming in there or thereabouts, or even above there, before the buyers come back in again to push cable back above the 71.79 high. Because if you just look on this intraday chart, there's no real urgency for a correction. Overnight, the reaction was fairly positive. I mean, in the last few minutes, you've actually seen a bit of a drop away, but it's still finding support that comes in above that 171 level. On a consistent basis, and I think these momentum indicators are fairly neutral. They're not really in negative configuration, apart from, you could argue, maybe the MACD lines, but certainly I think that this the RSI is not overly bearish and not really suggesting that there's a correction underway. And you do have the trading throughout the day in front of the Fed meeting minutes tonight at 7 o'clock. So you've got a full day of trading without any real data to drive this market. So it could again be a bit of a consolidation day until that 7 o'clock Fed meeting minutes are released. But it's, as I said, I think it's just this chart doesn't really have a major correction in it. From what I can see at the moment, I just think it's going to be more of a sideways drift before we see the next leg higher. Anyway, that's my outlook on cable today. I wish you good luck in your trading, and I'll speak to you later. Thank you.